Aditya Agrawala joining us on the show along with Sandeep as well as Kunal. Good afternoon to you, Aditya. Thank you so much for joining us. But before I come to you, Aditya, let me actually go to Sandeep and get his view on Bajaj Housing Finance. If you look at this one, come out with the numbers, they have delivered a profit. There is a growth in the profit, but you have a lot of brokerages and analysts actually citing the fact that there is a concern, especially when it comes to the growth, given the fact that there's a reduction in the launch of the residential properties, and that could also impact the earnings or the way forward for Bajaj Housing Finance. Apart from Bajaj Housing Finance, how are you actually witnessing or actually viewing this entire housing finance space? Because yes, financials is the top of the list top of the list of everyone's buy list rather.
Specifically, I think housing finance specific companies, I think the risk is of margin squeeze, because as the rate cuts play out and most of the loans tend to be floating rates, so you'll see a repricing of loans and the cost of funds will lag behind. And many of these housing finance companies don't have the advantage of CASA deposits of banks, where the larger banks have cut the CASA deposit rates also, and the saving bank rates also. So I think, and specifically Bajaj Housing, I think it's still continue. It is pretty expensive relative to the overall financial space, even after the correction it has seen. So I would think that it will either consolidate or correct more, and anyone looking to buy it will wait it out.
Yeah, that reminds me, Axis Bank, Sandeep, after ICICI Bank and HDFC, what are you hoping to hear from Axis?
I think most of these banks, we've seen that on the net interest margin, they have surprised on the upside. Most of them have given a reasonably bullish outlook for the next year and going forward, despite some net interest margin compression possibilities. Asset quality is held up. So I think if asset quality of Axis Bank also holds up like it's held up for the other banks, then I think the stock could hold on, because it's much cheaper than the other larger banks, despite having strong risk management under the current CEO. I would think that if they continue to have a decent growth and control on margins as well as NPAs, there is further re-rating possibility in Axis Bank.
Since we're on the subject of Axis, let me take it across to Gaurav as well and find out what he's penciling in for the ET Now poll from the earnings from Axis this time.
When it comes to Axis Bank, we are expecting advances to grow somewhere in the range of 9%, while deposit growth could remain somewhere in the range of 7 to 8%. And as a result, when we talk about net interest income, it is likely to grow somewhere in the range of 6% on a year-on-year basis. When we talk about other income, usually Q4 is stronger for other income. But given that there are expectations that there may be some slowdown in loan book growth for Axis in Q4, we may see a lower fee income this quarter. And as a result, when we talk about PPOP, it is expected to grow somewhere in the range of 4 to 5%. When we talk about provisions, now there are no major concerns about the asset quality, but credit cost is likely to inch up to normalized level of 0.9%. And as a result, when we talk about profitability, now Street is expecting profitability to decline almost by 4% on a year-on-year basis, although it may remain healthy with a growth of around 6% on a sequential basis. When it comes to net interest margins, now Street is expecting some kind of softness in net interest margins because of the EBLR linked loans, and second is the change in loan book mix. So definitely a 3 basis point of fall is what they are expecting. But let's not forget that the peer banks have already reported some uptick in net interest margin, so definitely there is a scope of positive surprise here as well. In terms of the commentary, loan book growth and deposit growth commentary is definitely something to watch out for, and it is also very important to see how bank is commenting on the margin outlook for FY26. But definitely on the back of the numbers, we are expecting good set of numbers with some expectation of positive surprise from Axis Bank.
All right, thank you so much for that, Gaurav, for the Axis Bank preview, what we're expecting. As you can see it on your screen, you will have the management actually addressing post their earnings at 6 p.m. But let me come to you, Aditya, and let me get your view, especially on the banks, the private sector banks, because you had HDFC Bank, ICICI Bank performed really well, exceedingly well with their earnings. And that's one of the reasons why also you saw the stock price outperformance for both of them. Among these private sector banks now, which one are you liking, given the fact that most of them have seen already good set of rally?
Hi, afternoon, Cheryl. Thanks for having the show. I think a chunk of these private sector banks are looking good. Names like HDFC Bank, Kotak Mahindra Bank, Axis Bank, all of them are looking very interesting to me. And after a good run up in Kotak and HDFC, they've taken a pause. In fact, ICICI too, all three banks have taken a pause. And because results are due for Axis Bank, you're seeing some kind of a buoyancy in Axis Bank. And I think so. Axis Bank has a lot of catch up to do as well vis-a-vis Kotak and HDFC Bank. So from here on, if there is no real shocker as far as the results are concerned, I think Axis Bank should see levels of 1280 to about 1320 on the upside. And apart from that, I think HDFC is also something that one should clearly have in the portfolio, more from a longer term time horizon. On the upside, you can look anywhere in excess of 10 to 12%, even from current levels as far as HDFC Bank is concerned. And similar is the view for Kotak Mahindra Bank. So all three banks, Axis, HDFC, and Kotak, do really look good to me on the chart setup, and you should have them in your portfolio from a longer, medium to longer term time horizon.
All right, so that's the view coming in on private sector banks, the ones that you can actually look at adding onto the portfolio for a longer period of time. But Sandeep, do you think that now the banks have come into an overbought territory, given the fact that everyone is talking about banks? Do you think there's other sectors that also that have these opportunities wide open, and then one can actually look at accumulating right now?
So I think eventually from banks, what we'll see is that things will spread around to NBFCs, companies with benefit due to lower interest rates like capital good, infra companies, autos, etc. So I think with all of this will happen over the next few months. So I think the initial move has been led by banks. Banks will still continue to do reasonably well, given the fact that they are the largest proportion of the indices, and as foreign investor flows remain positive, a large proportion of that does goes into financials. And the other big segment, technology, where a lot of money used to go to, there the outlook is hazy. So I think financial will get a reasonable share of the money, but the rally will spread.
All right, on that note, thank you so much actually, Sandeep, for joining us this afternoon to give us your view on the markets, especially on the financial space, be it the banks or the NBFCs. Thank you so much, as always, for being a part of the show.
If you like this video, then like, share and subscribe to ET Now.